Welcome to the Real Estate Podcast with Michelle Hayward. Get the latest information meant for buyers and sellers straight from real people in the industry.
Well, hello, everyone. Thank you for just joining us on today's podcast where we are talking about something that I strongly believe, is important to the economy. It plays a big part in real estate, even though you might not be aware of it. It's closely related to residential real estate or residential lending specifically. But today we are talking about commercial lending, and it's the marriage between commercial lending and real estate. So, as I mentioned, commercial real estate is really it's one of those things that you might not know much about, might not hear much about, but we have someone here today with us who is going to just put it in layman's terms for us, some things that you might be hearing for the first time. We'll again kind of break some things down, and I'm just excited today. So with that, I have with me today Christina Heide. She is the commercial loan officer of Commerce Bank of Arizona. So thank you so much, Christina, for accepting my invitation. And how are you doing today?
I'm doing good, Michelle. Thank
Good.
you. I love the idea that we're officially married here.
We are married. We are absolutely married. Well, and one of the things about commercial lending, like I said in the beginning, that people don't really know is that it really helps promote the economy. It really helps grow the economy. And so that's one of the things that we want to talk a little bit about today. So for starters, let's just break down what the function of commercial lending even is so the viewers and the listeners can have a better understanding.
Sure, thank you. So, the purpose for commercial lending is to help business owners as well as investors um, ob- uh, obtain ideal and optimal lending structures to purchase their buildings.
Okay.
So again, they're either owner occupied, so for businesses that are growing or expanding, or investors, which we have quite a few here in the Valley, that buy the buildings and then tenants lease from them.
Okay. And I also, as you and I've got to connect, as we got to know each other a little bit better, I also have a commercial lending background. And what I have found interesting about that is that the two, between commercial lending and going back to residential lending, while, like I say, they have some similarities, there are some differences. And so you don't really see too many investors in the residential world. Not to say that they don't look for residential properties, because they do, of course. They're looking for, investment reasons. But for the commercial side, my experience was more of dealing with business owners who needed those commercial loans. So what type of programs do you actually have for business owners and investors who might be interested in getting a property?
We actually have quite a few. And even before I start, I have to say we're very fortunate to be in Arizona. It's a
Okay.
robust economy
Oh, yeah, absolutely.
versus other parts of the nation right now. And there's still, I mean, every corner you look on, it seems there's development, there's ground up construction, there's, a lot of new retail. The
Right.
303 is blowing up out there,
Oh,
with gifts
yes.
coming. So, and then we just, of course, got, finished with the Super Bowl and the Open and Barrett
I
Jackson.
know.
It's very robust, and I feel very, grateful for all of
Right.
that. With regards to lending options for owners, there's a couple of different structures. We can do
Okay.
conventional lending. I always like to say so. Conventional lending is where I am we do it through the banker. It's usually
Mm-hmm.
20-25% down. I drive the limousine, the clients in the back, and I just, kind of keep them abreast of the ride as we go along.
Oh,
And we
nice.
also offer SBA. So
Okay.
SBA is ideal generally for, and it's only for owner occupied, but it's generally 90% down for commercial real estate. It can be more if they're going to do business acquisitions, depending on the business and experience.
Mm-hmm.
But for real estate, it's 10% down, which is ideal, especially if you don't have the 20 to 25%.
Okay.
Um, but it is a little more cumbersome. The beauty is it's only 10% down. You're Instead of being in a limousine where I'm driving, we're both
Mm-hmm.
in the back of a bus. I say, and every once in a while they'll let us know where we're going. So,
Okay.
but we do it all day, every day, and again, it's very optimal, and it gets the job done. And then for investors, again, we have quite a bit of different options too.
Mm-hmm.
Primarily depending on the investor and what type of loan structure they're looking for. So most investors who are seasoned pretty much already know what they're coming into and what they're
Right.
looking at in loan to value that they're interested. Many of them don't like to be over leveraged, so many
Mm-hmm.
will come in, with 50 to 60% down again, so they're not over leveraged.
Right.
And then we do quite a bit of construction lending as well, ground up construction, all property types. It just has to make sense.
Okay.
And on our constructions, projects. So we generally do 12 to 18-month interest only. These days, that's not so ideal because of interest rates and how they're taking up very quickly.
Mm-hmm.
So we offer what's called a forward rate lock, which for an additional point, you can lock the rate in today and you'll have that rate when your construction's complete 12 to 18 months. So
Okay.
it's a benefit. Again, otherwise you lock it, if you would have locked it in last year, it would have been, you would have started at 4% and today you're at 6 and above.
Right.
So we could have
Right.
locked it in. But we didn't have it last year. Rates were
Right.
going up as they are right
Well, that's one of the things that I hear a lot about from those who are interested in buying, whether it's residential or commercial. And like you, I'm sure you hear it a lot as well. Those
with
rates,
regards. Yes.
with
Yeah.
regards to
Well, and I
rates.
have to say we're fortunate. I mean, we only work with business owners and investors on the
Mm-hmm.
real estate side. Very few are in a position to just sit on the sideline and wait it out. And
Okay.
for those who did, again, going back a year ago, it hasn't been an optimal wait.
Okay.
So it's a gamble. But I think
Yeah.
real estate always is, especially when rates and everything, the environment's changing like it is.
Mm-hmm.
The best thing to do is you could purchase today and refinance 3 to 4 years from now
Right.
when it makes sense, and then but you've secured the building then that you want to be in
Mm-hmm.
and allow the business to grow and prosper, or the investment property as well. And we notice a lot on investment properties, a lot of tenants are coming back in. um, I'm in a building here at the Promenade in Scottsdale, Frank Lloyd Wright and Scottsdale Road. It's been vacant pretty much
Oh, okay.
since 2020. We've been here holding strong, thank
Oh.
goodness. But not a lot of businesses are, and even in the last year, it's all starting to fill up again. So
Oh,
you can
good.
see
Okay.
that, yeah, and a lot
Okay.
of the buildings around us.
Now, in your experience, so when business owners are coming to you, or even investors, what types of properties are you finding that they're mostly interested in?
Mostly, and it always, I would say, is office and industrial.
Okay.
And here in Arizona, we don't have enough industrial to go around, which is, beautiful because now we're building
Mm-hmm.
again,
Right.
construction. But at the same time, we always see retail. There's always hospitality,
Right.
car washes, auto supply stores. There's really no end, to the businesses here and those
Mm-hmm.
that are growing and prospering. So yeah, they vary quite a bit.
Well, like you mentioned, everything is growing on both the East and West Valley here in Arizona. And that growth, I will tell you, has caused, I would just say a massive influx of people who just want to get into Arizona somehow, some way. So I know that your phone probably rings off the hook quite often just with people asking questions about what do I need to do to be approved for this specific building? And you're talking about location, and you're talking about sometimes return on investment, and does that investment make sense from a commercial lending perspective? The bank wants to make sure that this is a viable property, right? You want to make sure that
Correct.
you're going to get paid properly. And so there's a lot of behind the scenes things that goes on in your world when you're trying to assist a business owner or investor. So now with that, one of the questions that I would like to know, and I'm pretty sure viewers and listeners would like to know, is what recommendations do you have for those who are looking to become business owners and get a commercial loan?
Sure, it's a great question too. So I one of the first things, and I'm not, being partial, I would
Uh-huh.
highly recommend contact the banker, contact
Okay.
someone like myself. Let them know what it is that you're looking to do,
Mm-hmm.
and and from that point, then it can start opening a lot of doors to a lot of questions. How much do you currently pay per month? How much are you
Mm-hmm.
wanting to pay per month? How long you plan to stay in the building?
Right.
We do. It is, commercial real estate. Almost every bank is a global lender, unless you
Mm-hmm.
go with their asset base, and um, there are other types, but for generally for the bankers, it's global lending. So you not only look at the borrower and the guarantors, you do look at the business, the
Mm-hmm.
location of the property, the condition of the property, whether they're cash flowing, have they been cash flowing the last, 3 to 5 years. So you pretty much look at everything, but really making that first phone call and just kind of running things by. Because I have people sometimes say, I'm looking at a $2 million building, and right away I'll ask, have you figured out how much that's going to be a month, and can you afford
Right.
that? And some, it does happen. And again, it's nothing against them. They don't do it all day, every day like we do.
Right.
So you can
They're
figure
relying
that.
on you. They're relying on you to tell them that information, and most often they don't know where to begin. And there's again so many different moving parts. So it's a person who comes to you and says, "Well, hey, I want to be a business owner and I want to buy this property, and I know, there's a number, and I researched it and there's a price, but where do I go from here? Who do I contact?" And so when I get phone calls, sometimes I'm referring them back to, well, maybe I shouldn't say sometimes, all the time, I'm referring them to the person who, like yourself, that I know that can answer those questions for them and give them the necessary steps to take to see even if they qualify,
Hmm.
to move forward.
Absolutely. And
So, no,
again, because we do this every day, a lot of
right.
them aren't even aware that SBA is 10% down. So on a
Okay.
$2 million building, do you have 200,000? And
Right.
sometimes, they don't, but that's still, the building. And so for a lot of the seasoned brokers too, like yourself,
Mm-hmm.
by having them contact their banker, I
Right.
can figure out then what they are comfortable with per month, and how much
Mm-hmm.
that equates to on the purchase price, on their down payment, and things like that. And then they can contact you and start an additional marriage there
Right.
to start the right property. Yeah, to
Right.
get to the finish line. I
Right.
think that works a lot better.
Oh,
Yeah.
absolutely. And it is a team effort,
Mhm.
as you know, and I explain that to the people that I'm fortunate to speak with when I'm passing them on to the mortgage lender, whether it be commercial or residential. It's again with that person in mind and who I feel that can best assist them. And so, obviously, someone who's calling me for a commercial transaction, I'm thinking of someone like you, someone who's an expert in the field who I know is going to walk them through the process, make it simple, make it painless, of course, and just get them going. And so that's one of the things that I'm usually asked is, well, what are the approval requirements? And so, can you talk a little bit about that? What do you look for in your approval requirements?
Glad to. And again, it kind of goes back to, you're looking at your 3 years tax returns, you're
Mm-hmm.
looking at the borrower, you're looking at the property. If you're an investor, who are your tenants? What does your rent roll look like?
Mm-hmm.
Borrower or investor, what is your cash flow? debt coverage ratio that's
Mm-hmm.
generally, required for owner occupied is 1.25, which
Yes, I
means for every
remember that very
for
well.
every dollar you spend, you make a dollar and a quarter. And
Yeah.
investors like 1.3, so it's just a
Okay.
little bit higher, but it's a riskier product too.
Right.
So
Right.
um, so you do have that. It's pretty, it's pretty quickly done
Mm-hmm.
on the spreads. But the other thing is too, once you've talked to the banker. So I always say with the commercial agents like yourself, you guys are heroes. You're my hero.
Oh, well, thank
You're
you.
the
I
first
like
one in
that.
the trenches. Yeah, absolutely. Praise you, believe me. You're the first one in the trenches, with the client,
Right.
and then we're right there behind you. Because once you locate the property, you need to get the financing in place,
Mm-hmm.
and so we're there for you. I've also been doing this long enough. If I can't get it to fit where I am, and not every lender can do every type of loan request, I
Mm-hmm.
know plethora of additional bankers and financiers in the valley that are able to assist. So
Oh,
if it
good.
makes sense, it can get done.
Mm-hmm.
Um, it just, and even again, if it's higher risk, many times if it makes sense, it can get done. Might be a higher rate, might be a lower amortization, things like
Mm-hmm.
that. But again, it's a way to get started and then revisit it 3 to 5 years to see if you work to restructure the loan.
Okay, well, great information, Christina. With that, one of the other questions that kind of popped in my head as you were talking about that, what about the person's experience? Does that factor in at all, whether or not they've been a previous business owner, what their knowledge might be of the particular product or service that they're trying to open up or expand?
Yeah, another great question. So, if you're already in operation, generally 2 to 3 years,
Okay.
financials is what we're looking for. Tax
Okay.
returns that you filed taxes. We're looking for a positive net at
Okay.
the end. Yeah, again, we're looking for that debt coverage, and then does the real estate and tenant improvements, does it all qualify under that
Mm-hmm.
umbrella?
Okay.
Um, so that's for the owner occupied piece. And then on the investor side, in order to fit, really, it is with that in, you're looking for a seasoned investor as well.
Okay.
So let's just say someone's coming out to, they want to be a first time hotel, owner. So
Mm-hmm.
again, if they're not owned, if they don't always, or let's just, that was a bad, because you can do that as an owner occupied too. So let's do retail strip center. They're not going to occupy every business there. So um, again, you're looking for a seasoned investor that's generally done it before. Not to say it can't be done for the first time investor, but again, the game changes. Usually,
Mm-hmm.
they are going to require more down. It's a higher risk product when you're the first time,
Okay.
doing these. If you're the more seasoned you are, the less risk. The bank becomes more comfortable. Everyone becomes more comfortable with that. And then
Right.
going back again, real quick, to owner occupied. Experience. If you've been in business 2 to 3 years, you have that behind you. But
Right.
the SBA is a great platform for startups. So
Okay.
any business that comes to us, and with most banks, if it's a startup business, we're going to look at it SBA, just Small Business Administration. It's ideal, can be anywhere between 15 to 30% down, depending on the risk factor, the product, all of that. And they are looking for transferable experience.
Okay.
So, with that being said, we just had one that we got approved, and then you're working with the bank and the SBA. So, you got to get the bank's
Mm-hmm.
blessing, and then you move on to the SBA. So, we just had one that was like, I won't say the name, but it was a doggy daycare
Okay.
type facility. But the husband and wife team, he was a high end financier for corporate 500
Mm.
companies. She had worked in a dog daycare a couple of years. So I wasn't sure, will that transfer? No direct experience, but
Mm-hmm.
so far it has. They just had to produce their resumes, their business plan, getting everything over that the SBA required. And
Okay.
we're moving forward with that. So that's on a real estate as well as the startup. But they can
Okay.
do just business startups too.
Okay. So it sounds like you have those that are just getting their feet wet and don't know where to begin. So that conversation certainly needs to be had with them up front
Hmm.
so they know the proper steps. But those who are a little bit more seasoned and maybe those in between, the expectations would be a little bit different. And the
True.
bank would feel a little bit more comfortable with them given the fact that they are more seasoned. Is that
Correct. Yes,
correct?
especially
Okay.
on the investor side. I mean, owner occupied, a lot of businesses, some will only purchase one building, in
Mm-hmm.
their 20, 25-year existence. Some will need to purchase additional, based on their growth
Mm-hmm.
experience. Um, but again, if it's their first commercial real estate building and they've been leasing generally, and you can do the numbers all day,
Yeah.
leasing, no matter when it is if you can afford to buy, you're generally going to be paying very similar amount per month
Right.
than if you were leasing, especially if
Okay.
you're going to hold it long term. I mean, I've done business with business owners that have been in the been leasing the same building for 20 years.
Oh,
They could have
wow.
bought it 3 times.
Right. I was just going to say, and you're right. The rental rates more than likely are very closely aligned to if you actually owned the property. But as every situation is different, and some people might not be
So,
in a position today
right.
to buy. So leasing obviously is the next best choice until you can get there. So now, what are you hearing with the market expectations? Because of course, with rates and going up and down and just kind of being a little static right now, what are you hearing out there for market expectations in the very near future? Near future being, I say, next 3 6 months.
So that's just the greatest question ever because we all wish our crystal
Right.
balls
Like,
were on fire telling us, right? But
yes.
I mean, so with all the economic forecasts and updates, it's no surprise their prime will go up again. They're
Mm-hmm.
saying Q2 could possibly go up a couple of times in this year,
Okay.
23. Prime right now is at 7.75, 7.75.
Mm-hmm.
Last year at this time, I think it was like 4.16.
Big
It's
difference.
crazy. Yeah, it's really jumped. Actually, I have some notes here real quick. Let's see if I can find it real quick. Last year at this time it was 3.5. So
So
that's
double.
huge.
Yes,
Jumped a lot.
double. Mm-hmm.
But at the same time, we thought we were going to only tick up at, a quarter of a point each time. And a few times there we went 3 quarters. So there's no doubt that's going to happen.
Mm-hmm.
Building supplies, there's a rumor they're coming down. I don't know if that's gonna, really be happening, but for to build right now, still a lot of contractors are, their bids are only good for,
Right.
10 to 30 days.
Mm-hmm.
So, and that again because the costs are just changing so much. So
Right.
that's yet to be seen. I think there's just still so many unknowns. As far as Arizona, they're still saying, and you might even know the statistic better. What is it? 200 people are still coming here a month, or is it
It's
a
it's
week? I mean,
very
it's
it's
crazy.
very high. It's very, very high. And
They
like I say,
don't
they're
see that
coming in
changing.
droves. Yes. Yes.
I mean,
It's not slowing down.
multifamily, yeah, multifamily right now goes up and then it's
Yeah.
full.
Yeah.
Some of the multifamily projects we've looked at, they're full before they've even the ground hasn't been broke yet.
Right. Well, there's a wait list. There's actually a wait list in many cases. So, like you mentioned, off the 303 and off of the 101, I mean, places are just popping up all over, residential and commercial. And quite often when I call just to kind of check on some things, just to stay abreast of what's going on in that specific city, just to be able to speak to it to those who might be interested in moving to Arizona, I will tell
Mhm.
you there's a wait list in some cases to get into these places. So
I
that's a
believe
good thing though. That's a good thing.
and we've even been doing a lot more business in construction
Mhm.
development in Buckeye, Gilbert, Casa
Yes.
Grande, Florence, Arizona.
Yes.
I did my first loan in 17 years in
Oh
Florence.
wow. I just found
So
that on the map the other day. I was looking for something else and found Florence. I said, "Oh, there it is." I had heard of it before, but it's a little ways from where I'm at. But yeah, well,
Well, and it's a
that's good.
very quaint, area that
Mm-hmm.
is becoming more and more popular every day. So yeah,
Okay.
but again, like I said, even Casa Grande, so I mean, the valley used to just feel so sprawled out, and now everything just feels like it's coming together. I mean,
Right.
Glendale from Scottsdale now isn't that far.
Right.
That's where the the sports are, the Cardinals,
Yes.
all that. There for a while before
Mm-hmm.
the 101, it was a long, seemed like a much further away. So
Mm-hmm.
yeah, the valley's getting smaller every day,
Right. Well, and they're
and we're going
continuing to
up.
build even more, infrastructure to be able to just make it more user friendly coming and going places, because everything, as you know, the East and West valleys are so spread out, but there's constant traffic going back and forth because we do have that influx of more people moving in. Like I said, it is kind of the place to be. I mean, that's what I hear when I talk to people. When I host open houses, that's what you hear is, I want to be here in Arizona. Or I get a call from an investor. I want to buy a property there, whether, again, it's commercial or it's residential. It is typically what my conversations are about.
Yeah,
So,
we're
yeah.
fortunate in that
Oh,
respect for
yeah.
sure.
Yeah, absolutely. Absolutely.
And yet
Well,
we're feeling it too. I mean, as robust as it is, you can
yeah,
you can see things tightening up a little bit,
you
but
can see it. You can feel
yeah,
it.
a little bit, but not
Hmm.
horribly, and again, not I don't think in the as much as the areas around
Right.
us. Yeah.
Yes, absolutely. So now, is there anything else that you would love to share with us that you feel would benefit the viewers just to hear about, or even those who might be watching this podcast?
One of the things I will say, and Michelle didn't pay me to say this at all, but I truly believe this. If you're really looking to purchase a commercial building for your business or as an investor,
Hmm.
work with a commercial agent. They know how to negotiate, they know how to get you in, they know how to hit all the due diligence and timelines.
Hmm.
I see people. There's a client right now who's been trying over a year and a half just to do it on his own. He'll
Oh,
call
wow.
me and have the best building, and he's really got it this time, and he just can't get to the signing,
Right.
because he doesn't have an agent working with him.
Oh,
And they're really see that there's a big difference. So I always ask too when someone calls, what agent are you working with? If they're not, it's a flag. And
right.
then what commercial attorney?
Right.
Because people are like, why would I need an attorney? And almost every investor has an attorney. But as
It's
far
a
as
smart
business
move.
owners, yeah, they don't think about the
Yeah.
fact, well, I'm just buying one building, but again, you're taking out $1 million loan, or even
Right.
if it's 600,000, if you have the attorney up front, because all I can do is help with the financing. That's
Right.
all I can do. There's a lot, as you know, Michelle, information
Hmm.
in the offering memorandum and all the closing docs regarding the building. Um, and you save a lot of money if you have your attorney up front just to review the docs real
You
quick
do.
versus if you go in it without one and something goes wrong, and it can, it usually starts about $10,000 from what I've
Right.
heard. It can go up, up, up. I've heard some sad stories on that. So again, it's
You and I
just smart
both.
to retain, yeah, a commercial agent as well as an attorney, and then you have your banker, and so you have your partners right there that are going
Right.
to help you, meet your goal, get to the finish line, and continue to grow and prosper.
Well, what I believe happens, to your point, is most often people don't realize that there's a lot to know. There's a lot to know that you don't know. And why not reach out to the experts who are going to help you navigate through that terrain? So, your realtor is going to help you not only find the right properties, but also connecting you with the right, commercial lender who can help you with that, and
Hmm.
propose that you get an attorney, because quite often you get asked questions that you're that's not my lane. I'm not a CPA, I'm not an attorney, I'm not a commercial lender, but I have those connections for my clients to refer to, just to make sure that they're taken care of. And like you said, there's so much risk involved. So why not start out talking to the right attorney who's going to get the client, help them with all the legalities of everything before you jump into something, just to find out after the fact that it's not quite as simple as you might have thought it was,
And many
so.
times, like you said, with the attorneys, from what I've seen, many times it's just a matter of reviewing the docs, making sure
Right.
it reads the way, because I've seen them a few times say, are you aware of this? And if they
Hmm.
are, great. If you weren't, maybe we should, discuss
Talk
that.
about it.
So, yeah, just little things like that.
Yeah, and it certainly saves you on the back end of those headaches, and mainly for the client who's they're the ones, not to mention the bank, of course, the financial institution. You're taking on all the risk. You're lending this money to this client, and the client has to pay that money back. But when the client is not aware of certain things that have now come about after the purchase, it's a little late at that point. So you definitely want to have, people who are there, like you said, the partners who are there to help them throughout that entire process. And I always recommend, make sure you contact an attorney. If you don't know of any, I can refer some to you. So-
Amen. Yeah.
Absolutely. Well, listen, thank you so much, Christina. I really appreciate your time and just all of the information that you shared. I believe it is going to be so helpful to those who listen and who watch this podcast. Now, out of respect of your time, one of the things that I like to do before I let you go here is I always like to conclude with some positive message just for those who just might need that little extra boost in their day. Sometimes I'm even talking to myself because we all need that extra boost in our day. So, one of the things that I saw today and that I now have on my screensaver is, do not worry about tomorrow, for tomorrow will take care of itself. And that's from Matthew 6:34. And that is one of the rules that I try to live by daily, because you know how it goes. We start thinking about tomorrow. We start thinking about next week, a year from now. And nobody knows what tomorrow holds. But we get overly anxious about things that we just have no control over. So focus on today, be grateful for today, count your blessings for today, and let tomorrow take care of itself. With that, thank you so much, Christina, again for your time and again, all the information you shared, and I hope you have a wonderful day.
Thank you, Michelle. Always great talking with you.
You too. Take care.
Have a great day.
You too. Bye-bye.
Thank you for tuning into the Real About Real Estate podcast with Michelle Haywood. Like, follow, and subscribe to continue to get the real about real estate.